Good morning and happy new year to everybody. It's the 4th of January. We are Signal Centre Talking Ball. I'm Joe Neighbour, joined by Steve O'Hare. Good morning, Steve, and happy new year to
Morning.
you.
Happy New Year to you as well, and everyone out there.
Indeed. Nice to be back. Feels
Yeah,
like it's been forever.
yeah,
Last
it's
one was
been a
on the
nice little break.
23rd we did.
Okay. Yeah,
Um, got to confess, I haven't really looked at anything market-wise in that time.
I've
Just had
had
a
a little
nice break from
browse.
it all.
Yeah, it's nice to have a break from it. It's good. I've had a little browse, and yeah, a couple of things that are interesting going on. Obviously, the stock market's rallied into the end of the year and continued after as well. So
Yeah.
I didn't expect
Santa
that.
Rally worked quite
Yeah,
nicely, didn't it? Again.
very nice indeed. Yeah, can't bet against it. Um, but yeah, I thought it would rally into the new year and then maybe get sold quite aggressively. Um, but it feels like it's going to continue at the moment.
Yeah, all very much on the front foot this morning. FTSE leading the way, actually, up by 0.9% almost. Looks like there's some big moves in the Aussie market overnight as well. In terms of what's going on the corporate front in the US, Apple stock briefly rose above 3 trillion on Monday, shattering yet another record and underscoring how the pandemic has turbocharged big tech's decade-long rise. The company was the first to achieve this milestone, although it failed to hold above that level. The iPhone maker's share price climbed steadily for years, and the rally comes alongside a steady revenue growth that bets key products have a strong long-term outlook. Tesla's also off to a strong start. The electric car maker smashed its quarterly record for deliveries in what one analyst called a trophy case performance. So it's obviously very good news. That's despite Elon Musk selling into that recently as a result of the Twitter poll that he did a couple of months back to pay his tax bill. There has been a string of new studies that have confirmed a bit of a silver lining when it comes to the Omicron variant, even as the number of cases a number of cases continue to soar to record numbers. More than 1 million people in the US were diagnosed with COVID-19 on Monday, which is a new global daily record. The number of severe cases and hospitalizations have not increased, which is obviously very good news. And I guess that's why we're seeing markets on the front foot today. Obviously, there are still some worries about it, but ultimately it looks to be not as bad as expected. So we have seen a jump in the Asian markets overnight. We are straight into the thick of it with some economic data today. We've got the ISM manufacturing PMI numbers from US at 3 p.m. And we've got the non-farm payrolls due on Friday this week. So straight back into the action. Let's have a look at some charts. Steve, where would you like to start today?
I'd like to start with cryptocurrencies. I'll be
Morning,
doing a
Chloe.
video. I'll be doing a video on this later. Um, and yeah, interesting formation setting up in Bitcoin. So head and shoulders formation, the rally from just this level of support 28,800 that we've had on like multiple occasions, 4 occasions. We had this impulsive move higher, and now we're getting the correction. Now, expecting an ABC correction, but also quite like the look of this as a head and shoulders formation. So currently we've got a level of support here which is held over the holiday period. That comes in at 45,500. The neckline, you draw a line from here. Oh, let's get it marked up. So the neckline, a break of the neckline, it would be below 43,000. So definitely that's the levels to watch. As the stock markets rallied over the Santa rally, I expected to see Bitcoin do the same and sort of at least push up towards the 60,000 level to test it. But it formed almost a bearish outside or engulfing candle last week, failed to do so, didn't quite get below the open of the previous week. So but if you merge these two candles together, it's looking a little bit ominous for Bitcoin at the moment, trading around 46,500. I just think it was just a 52,000 around that level capped gains. So that's the level to watch on the upside. A break above there could open up the upside. But however, I think the pressure is on. You're seeing volumes dying down, and yeah, I'm just a bit cautious about this. Ethereum is holding up a little bit better, but it's we've got this downward trending resistance line, which now turns into support, and that's held on a few occasions previously. We keep getting this dip down, and obviously this is a weekly chart during the week, and then the reaction higher. However, the rallies are stalling also, so the volume's down. Really need something to put some life into the cryptocurrencies. Cardano's held well. We've got a support line here. That's coming in now just above the 120 level. It has been up to 161 last week, which was quite a decent rally for Cardano after this bullish engulfing the week before. So a little bit of positivity here. We've said before, this 120 level really key to hold there. So moving on from there, let's dive into indices. As Joe was saying, FTSE has catapulted higher above the 7,400 level. Actually got up, stalled at 74.85. We can look back at the yearly high last year, coming in a little bit higher than this, 7,900. So yeah, it's looking pretty positive. Very, very strong start. Even after last week's candle looked a little bit ominous. I actually thought, this is the turnaround. We got a shooting star candle, but it's just projected higher. So obviously we got to go to the end of the week, so a little way to go. Resistance, probably you'll get some sort of resistance up at this level, 76.35, and obviously the previous highs here, 76.76. On the DAX, we've got 16,300 was last year's high, the all-time high, and we seem to be pushing higher towards there. We're just above the 16,000 level. Seems to be running out of steam a little bit, but I still, would wait for some sort of, need to see some sort of candle rejection or formation rejection before getting excited about the potential for the downside. It's very much focused on the upside, so I'm not looking to fade into this yet. Maybe you can even look at the daily chart and just see how strong yesterday's price action was, taking it above the previous highs at 15,980 and pushing higher and looking pretty strong. Bit of a doji forming today, but plenty of time to go. On the Dow Jones side of things, we've got a new all-time high, and let's get it up here. 36,685. That's not bad. That's obviously that will be down as the all-time high, last year's high. We had a sell-off into the last 48 hours of price action of 2021, but 2022 is looking to recapture prices and push higher. 40,000 isn't far away. Feels like a huge number, but I've been looking to short this for years, and it just like keeps going and going and going. Wow, incredible. Nasdaq 16,500. We've recovered to. We haven't recaptured all-time highs 16,768. That was from the week of the 22nd of November. Tried to get there last week, but failed. Shooting star candle formed, and again we're off to a positive start today. So price action looking very good to start this this week off, and along with the S&Ps, which has also formed a new all-time high last week, 4,808, just trading just below there now. So again, really looking for some sort of indication of, I don't know. I mean, everything looks pretty positive. Even here, it looks a bit flaggy. Looking for further upside, but it's pretty tricky. Where do you put your stop? Maybe below here if you're looking to get long. 4,750. Looking for a projection higher from here. Yeah, very difficult to argue against this. So Aussie 200 looking pretty good. 76.50 is last year's high, and we're up now to just trading just below there at 76.40. And what a sort of day it's had today. Really decent. Obviously, I think, yeah, like you said, Joe, it's probably the Omicron variant of COVID is people are realizing now it's just also, you can call it a common cold. So people are relaxing a little bit about it. China 50 has had a bit of a sell-off and still under a little bit of pressure. This is a 100-day moving average we're looking at here. It's we found some support here, maybe looking to project higher. But really for me, I'm still sort of very much focused on this, the downside pressure that could be created coming in around about 14,500. So that was the week of the 13th of December. Since then, we've seen a nice ABC correction lower. Hang Seng still under pressure, challenging the 28th of September lows. So that's really not looking too healthy at all. The Nikkei outperforming that end of the Asian Pacific indices. A quick look at commodities. Gold had a sort of a revisit to this 1834 resistance level, actually got up to, what was the high, 1832, and then formed a bearish outside candle, so a clear rejection of that approach to the resistance level. We expected resistance around there, and it held fantastically. So again, for me, focus more on the downside for gold. It seems to get this upward momentum move, where there's a little bit of safe haven buying, and then it seems to fail and stall very dramatically. So yeah, I'm still sort of on the looking at the downside for gold. 100-day moving average coming in at 1792. That will be the 1790, 1792 support, break below there, and we'll have this upward trending tentative support line coming in at 1767. But the main one to focus on is 1755. Below that, 1720, and obviously the 1677. I still feel we'll get there at some point early this year. Oil has performed okay. It's been quite stable over the last week or so, hanging around the highs. 77.20 in WTI crude oil is support. 74.20 is support. 77.20 is resistance. That looks like the trading range over the last week or so. A break of either side and go with it. I'm more inclined to be buying dips with oil. That's how it feels. The Brent crude oil has bounced off the 100-day support, coming in at 76.83, and again resistance coming in at $80 exactly. So really looking for a buy dips or a break of that upside, as oil feels pretty good at the moment. That's pretty much covering off commodities. Over to you, Joe, for FX.
Thanks, Steve. Okay, so let's take a look at the dollar index trading in this bullish channel still, which we've been going on about for weeks. In recent sessions, we've seen a bit of consolidation. Yesterday, we saw quite a decent move to the upside in what was a bank holiday in European markets, but obviously the price is still trading yesterday. So nice move to the upside and a bit of continuation higher. Ultimately, still think this is going to move higher to the upside, but we've got some resistance here at 96.93 to overcome. Then we can start looking for this 97.72 level, which is these previous highs here, and also a 61.8% fib level, and also the upper end of this bullish channel, most probably as well. So still looking pretty good on that front. No real change of opinion there. On euro US dollar, that was trading in a consolidation wedge, if you liked here. Maybe we thought we were going to see an ending wedge form and see a continuation higher from this, but we rejected that quite substantially yesterday, engulfing all of the previous days gains that we posted on the 31st of December. So I would say that's probably validated itself, and we can still think now that we're going to see lower prices. So maybe what we're getting here is a bit of a consolidation, maybe a bit of a flag or a pennant before a continuation lower in line with this dominant downtrend. So still looking for ultimately a move down towards this level here at 110.58 to be seen in the short to medium term. If we take a look at cable, that's seen a decent move higher from this 31.8% fib level that was tested back at the early part of December. Seen a really nice move to the upside, although we are now starting to get pretty close to this downtrend resistance line. So maybe we'll start to see some cooling off in the price of this in the short term. But obviously, the outlook looks pretty good for sterling at the moment, based on this chart with this break above resistance at 134.15. If we take a look at sterling versus the Aussie, this looks pretty good. Formed a bit of a bottom pattern here, I think, although this is probably all a little bit messy, certainly this pullback here. But all in all, I think we've got a nice sort of rounding bottom shape taking place here, and we can look for higher prices for certainly sterling against riskier assets like Aussie and New Zealand dollar. If we take a look at euro sterling, we can see here we're making new lows here. So this is the euro moving lower versus sterling, taking out these lows here at 83.80, which is not a good sign. Still trading in a bearish channel. We are potentially about to test the lower end of that. Also having taken out this previous low here from the 19th of November. So doesn't look good there. We've got some key lows from back in December 2019 and February 2020 to now target on the downside. They're down at 82.75, so you wouldn't bet against that. I don't think we can look for lower prices there. If we take a look at US dollar versus Japanese yen, this is quite interesting this morning because we've actually taken out the previous high here from the 24th of November. A nice strong breakout, really impulsive move to the upside here today off the back of some pretty decent form, really, in this pair. So looking as though we're going to see higher prices over the short to medium term, following on from this big uptrend that we're already trading in, which began really at the early part of 2021. In terms of resistance levels, well, that big blue line was pretty significant, but obviously we've taken that out. We can now look for these highs up here to test on the upside around about 118.60, which was the previous highs from December 2016. So looking pretty good on that front. That's pretty much all I wanted to cover today on the currencies. I do need to get stuck into a few of these charts and refresh the technical outlook on a few of them, which I'll do over the next day or so.
Excellent.
Okay, so guns to the head trades from the 23rd of December. That's the last time that Steve and I did a talking ball. We had a small win on Euro US dollar of 7 ticks on 0.28R, and a loss on the DAX of 1R. Prior to that, Steve had a pretty good run on a couple of trade ideas on gold and DAX. I've got a trade ready, Steve, so I'm just going to dive straight in if you're okay with that.
Yeah, okay, as long as you don't take long, because mine's
While
ready.
you were talking, I spotted potential opportunity in gold. So this was
brilliant, like that.
You were looking at selling gold. You thought the price action would maybe more biased to the downside. So looking at this purely on an intraday basis, maybe there's a little bit of a bearish flag forming here following this recent drop from the highs around about 1831. So as you can see here, we've got the drop, we've got a little bit of a consolidation, maybe forming a flag. So I'm going to sell that there at a price of 1803 spot 2. Stop loss just above these highs here, assuming that the flag has broken and completed, then we can have a stop at 1808 spot 1. I've got a measured move from the flag, so taking the flag pole and then the break point, projecting that lower, comes in at 1770, which is also pretty much in line with a 78.6% fib level from this low here on the 15th of December to this high here on the 2nd of Jan. So a nice area to target here on the downside, looking for 6.7R on that one today. So a nice start to the new year if that plays out.
Lovely.
That's my trade of the day. What do you reckon, Steve?
Well, if you flick to my chart,
it's the same.
It's exactly the same. I mean, it's not exactly the same. I've sort of selling it 1802.97. I think I might just keep it, Joe. We're both going short gold. My stop is a little bit higher than yours. My take profit is a little bit closer than yours. So it's only 4-to-1 risk reward. Getting short here with a 5.5 tick stop and looking for 22 ticks on the downside. Just nice round numbers that I like. So yeah, I'm sort of happy to just stick with that one. Yeah, look, really, it was the flag formation for me that did it as well.
Okay.
Ideally, you get a break of this and then go with it. but we've got a gun to a head, so we've got to do it now. But yeah, just feels like quite a nice little level to go against it, with the dollar looking strongish.
Yeah, no change there really.
No, so yeah, dollar looks a bit flaggy to the upside, doesn't it? Yeah, it just looks nice. Yeah, I'm happy with that one. We'll go with that. We're all in, all in. Start of the
Yeah,
year. That'll be, if that does come off, it's like a 10% return sort of thing, isn't it?
that'd be
It's
nice,
something
wouldn't it?
like, yeah,
Just give up for the rest of the
yeah.
year.
We won't.
Done on day
Yeah, we
one.
will. I definitely will, because yeah, that'll do for me, donkey.
Yeah, absolutely. Mikhail on the comments asked about US dollar versus Canadian dollar. So I'll have a quick look at that just as he's asked so nicely. So this is my take on that market at the moment. So as you can see, he was trading in a really big bearish channel for many months, but we saw a decent breakout in sort of June, July time in the summertime in Europe. We saw a push to the upside before a pullback, and now we've seen this resistance act again to repel prices at 129.49. So I think while below that, we're probably going to see more consolidation. I think as long as we put in a higher low, then there is the potential for this to be forming a decent sort of bottom pattern, really. So I think if we can get a breakout above that, then we'll be looking for much higher prices. And just to give you an idea of how I'd be looking for, well, what sort of targets I'd be looking for on the upside, I'll be taking a measurement from the low of the move to the high here, and where the neckline appears to have formed, and projecting that higher. So we'll be looking for potential moves of up to 138.44 over the medium term. Also, what I like to do is see if there's any fib levels that marry up with those levels for an added bit of confluence. And yeah, we've got 61.8 at 136.53. So in that sort of region there is where I think prices on dollar CAD could get to, providing we get a break above this 129.49 level.
Yeah, I like that. And I'm looking at the hourly chart, and even more short term on dollar CAD. And you can see there's a nice little flag pattern that is built, just broken above it. Measured move target for that is the equivalent to a 78.6 retracement up to 128.83. So even in the short term, I like that sort of formation. Again, it feels to me a bit inverse head and shoulder like. But yeah, really needs to sort of, once we sort of clear that 127.80 level, feels like a bit of a opens it up to the upside. Obviously, there's some congestion here, but on a short-term chart, also looks pretty good. Dollar CAD.
Yeah,
Like
love
it.
that. I hope that was helpful for you, Mikhail. Okay, let's have a quick look at some data that's due out today then. So we've got German unemployment, which is already out. That was out at 8:55 this morning. We then have at 3 p.m. today the US ISM manufacturing PMI data. The index is expected to fall to 60.2. So that is that for today. We will be back tomorrow, and obviously going forward from now on with more of the same. Hopefully that was enjoyable, and you'll get off to a good start to the year with your trading. Anything to add, Steve?
No, all good. Yeah, good luck with trading.
Cool. Have a great day, everyone.
Cheers.
Goodbye.